Hi everyone, welcome back to Corporate Decoder. Today we're diving into a report from P3 Health Partners. Let's just say after this report their stock might need a little splitting up, get it? Because they're doing a reverse stock split. Alright, no more jokes, let's get serious. Basically this report is about how P3 Health Partners is trying to boost their stock price, but is it a real solution? So P3 Health Partners filed this report with the Securities and Exchange Commission, or the SEC, on April 4, 2025. This report is called an 8K, which companies use to announce big changes or events to investors. The big news here is a reverse stock split. On March 31, 25, they had a special meeting where stockholders approved this idea. Okay, what is a reverse stock split? Imagine you have a pizza cut into many small slices. A reverse stock split is like taking those small slices and combining them into fewer shares. The goal is to make the stock price higher. Savvy amplify existing shares of stock and combining them into fewer shares. The goal is to make the stock price higher. The company's leaders, the board of directors, decided on April 25 that they would do a 1-4-50 reverse stock split. This means that for every 50 shares of stock you own, you will now only own one share. This change is expected to happen on April 11, 2025. After that, on April 14, 2025, the stock will start trading with this new higher price, but under the same stock ticker symbol, PI. The reason they do this is that a higher stock price can make the company look better and attract more investors. Sometimes, if a stock price is too low, it can even get kicked off the stock exchange. If you're an investor, you might see a new number associated with the stock. It is called the CQZIPQ2 number, and the new one after the split will be 74441320,000. Now, what about those things called warrants? Warrants are like coupons that let you buy stock at a certain price. P3 Health Partners also has warrants trading under the symbol PIW. The number of shares these warrants can buy will also change because of the reverse stock split, but the warrants themselves will still trade on the market with the same symbol and COCP number. Since you can't really own a fraction of a share, if the reverse stock split leaves you with a fraction of a share, P3 Health Partners will pay you cash for that tiny piece. The amount you get will be based on the stock price on April 11, 2025. The company included a warning that some of what they're saying are forward-looking statements. This is basically them saying, hey, we think this is going to happen, but things could change. They mentioned that there are risks involved and things might not go as planned. If you want to know more, they point you to their annual report for a deeper dive into these risks. Now, let's step back and look at the big picture. P3 Health Partners is trying to boost its stock price with this reverse stock split. It's like putting on makeup to look better, but it doesn't change what's underneath. So what do we think about all this? Here's my take. P3 Health Partners is in a tough spot. Their stock price is low, and they're hoping this reverse stock split will make them look more attractive to investors. The good, a higher stock price could make it easier for them to raise money in the future. It could also keep them listed on the Nasdaq Stock Exchange. The bad, a reverse stock split doesn't fix the underlying problems of the company. If they're not making enough money or growing fast enough, a higher stock price won't change that. It's also a sign that things aren't going well, which could scare away some investors at the risks. Reverse stock splits can sometimes backfire. If investors don't see real improvement in the company, the stock price could fall again. Klein, solution for P3 Health Partners, they need to focus on improving their business, not just their stock price won't change that. It's also a sign that things aren't going well, which could scare away some investors. The risks, reverse stock splits can sometimes backfire. If investors don't see real improvement in the company, the stock price could fall again. Fix that. Overall, I'm not convinced this reverse stock split is a long-term solution for P3 Health Partners. They need to focus on improving their business, not just their stock price. Thanks for watching Corporate Decoder. If you found this helpful, give us a like, leave a comment, and subscribe for more deep dives into the world of corporate filings.